everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our favorite futures markets and formulate an attack plan for tomorrow's trading. Tomorrow, of course, being the 4th of the month, going on to the end of the first week of August, and, well, so far, we're seeing that volatility like we were talking about yesterday, and it's a very welcome sight. But at the same time, we aren't really accomplishing a whole lot once again, so a lot of the same really going throughout the entirety of the week. But as long as we've got a plan and we follow along with it, we should be alright as always. So like normal, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign up for our email list so that you'll know every single time one of these videos comes out. Along with that, in the newsletter, we talk about all kinds of different stuff, from stocks, cryptocurrencies, options, you name it. We're going to name it inside there as an area of interest or something going on with that specific market. So it's a great newsletter to get your hands on. Of course, if you haven't done so already, make sure to head on over to the live trade room subscription and trial info. From there, you can sign up for a 3-day trial. We can see what we're all about, sit down with us for a day or a couple days, and just kind of see what we're doing, right? It'll let you go into the live trade room with us. You'll be able to see the screens. You'll be able to see the markets that we're looking at, the trades that we're taking, etc. Just a really cool way to see what we're all about, hang out with the members, and all that fun stuff. Now, if you do really enjoy it, you can always sign up for a weekly or monthly subscription, and of course, if you join as a full-fledged VIP member, you get the trade room as part of the package. Now, taking a look at the euro, for the most part, once again, the euro just doing absolutely nothing for most of the day. Very slow, grindy with a lack of consistency, but overall, we do have a slight bull bias on our hands. That said, though, we could potentially be transitioning into a range as well. That fits just as well as the bull trend. Now, if we zoom out a little bit, obviously the bull trend is going to have a little bit more of a bias, and even the range that we have marked up between 19,125 down to 88.90, we're still going to be on the buy side. I would rather be buying the lows given the overall prevailing uptrend. It makes a lot more sense to be buying low in a range right now than it does to be selling high. The only selling at the highs that I really want to be doing are on profit targets, so because of that, we're looking for a dip down underneath 18,890 for a potential buying area. And there are a couple other things that really stand out. First of all, the big thing that kind of hits is the fact that we had that overshoot on the highs of the channel. They tried breaking through the top. They failed and came back down. They tested the inside, and that's a good clue of failure, where they break out of the side, they come back inside, test the inner edge, and then turn back down. That is usually a pretty good sign of continuation to the downside, or a counter trend move in this case. They found the bottom of the channel, nice little bounce up. They tried breaking through the lows. This is the anticipated move that you get when you have a breakout of the highs. You expect them to break the lows. Normally, you expect them to be a little bit more measured, right? If you were to measure this distance, you'd be able to kind of see the breakout as about the same distance down here, and that is not the case this time. It's a shallow little breakout. They couldn't even break that prior swing low and shot right back up again. Now, when they returned to the highs at 19,125, that's the area that they started cycling right back down again, and that's why it looks so prevalent that there's a chance they're going to cycle into a range. It looks really good. That basically stopped a huge bull rally dead in its tracks and turned it right back around. This may be gearing up for a breakout move into a pullback and continuation higher, but given the overall range sentiment and the fact that we came out of a range earlier in the day, it makes a lot more sense that this will also transition into a range. So I want to be buying as low as possible. So anywhere 18,890 or below should be fine to buy in and try to push the market back up towards those highs. Over on the gold market, monster drop early in the, well, I guess at yesterday evening at 1900, just afterward, big drop lower, and we had a really hard time breaking out of that for most of the morning session. We came in to really just kind of struggling around the highs of that big breakdown candle. Even at 8 o'clock, we were still fighting around there, and until then, we basically spent the entire night session inside of that drop lower. So a big range in the overnight session, and that leads us to, again, anticipate that we're probably going to have more range-bound type movement. There may be some breakouts in the mix, but of course likely to end in a range like we're seeing right now. The overall trend does always play a part, and the overall trend really isn't a whole lot, but a slight bull bias to it. If anything, this looks as though they tried to break out through the bottom, found that beautiful 3-push wedge low, and bounced right back up again. So In all honesty, even though it doesn't look like a whole lot, this looks to me like we're gearing up for another attempted breakout of the highs. We just need to find the right place to come in. Now, because we are so range-bound, I still need to be careful about buying too high. We don't want to get stuck buying the high just to let it pull all the way back on us. So what I'm looking for is a buy between 72.2 and to 71.5 for a potential area buy zone to push the market back up and make that attempt at the breakout. Now, what I would really like to see, in all honesty, is for this to take a while. I want to see this kind of falter around and mess around and then break down and come to it, because then we're going to have the bottom of the channel coming into play, and we'll have two levels of support stacking up on one another, not to mention a daily level in there as well at 72.6. So really, at this point in time, the longer this takes, I would rather see this bounce at around 11 o'clock tonight, rather than I would see it dip down right now. Preferably a little bit more time to it, but the market will do whatever it wants. I just want to buy as cheap as possible for that continuation. On crude oil, mostly range bound, not a whole lot going on here as well. They tried making a run to the downside, got a little too parabolic, and took it all the way back. But once they hit those highs, they had a heck of a time up there, could not get through it. And when they tried, every single time they tried to break out of those highs, it failed aggressively. We're talking either a big one candle drop or several candle pullback. And in this case, this final one ended as a reversal all the way down. So that leads us to an open-ended objective to the downside, 48.69 for the buyers to try to come in and find support off of. But not only that, sellers also looking to take profit down there at 48.69. We do have a spike down into a channel, and the channel low is blowing off the bottom just a little bit. And that does give signs that if it is going to return back to the lows, it's likely not going to hang around very long, because there's probably going to be more buyers than sellers down there. So one thing that you could be looking for is sort of a multifaceted type of level where we can have horizontal support and resistance, a potential wedge bottom, and a trap below the low. It would look really nice to get that going at around 7 o'clock tonight, 1900 Eastern, for that bounce back up towards the upside. Either way, we do still have to kind of keep in mind the overall trend, and the overall trend, although it's not the strongest thing in the world at the moment, we do still have a bull trend that brought us into this range that we've been stuck in for the past couple days. So I would rather be a buyer, and I would rather be looking to buy low, and as low as possible for swing type buys. Now, the overall upside momentum, we do have that potential kind of expanding wedge, which we are running into as well. But if we can start breaking down below that very obvious level of support down here between 48.50 down to 48.38 or so for buying support to come back in for a long-term bounce back up towards those highs. So we got to be careful, right? In the short term, we're looking for a quick push down to find a new low, looking to then reverse right back into a longer term buy to drive the market up into the overnight session, maybe even into next week. And then finally, wrapping up with the S&P. Once again, you're probably sick of me saying this already, but the S&P has done nothing. We find another range, and we're still stuck inside that range from yesterday. Really nothing happening at all. Nice little wedge top coming into play, and a possible wedge bottom coming in. They couldn't even hit that. So just a ton of weakness all over the place without much going on at all. And, you know, looking at the bigger picture today, well, you know, measuring it all up from high to low, the S&P managed to eke out 8.5 points. That's it, okay? That's usually in better moving times during the fall, or, you know, when the market's at least kind of moving around a little bit more than this. That's usually just one leg. Lately, that's been the entire day. So we are very, very low volatility right now, and we have to be careful. Now, whenever we have low volatility, chances are we're probably dealing with a range, as if that wasn't obvious enough. We're looking to buy low, sell high, stay out of the middle, and the emphasis due to the bigger picture is going to be bullish, so we are looking to buy low more than sell high. Right now, we're kind of cycling off of the top 25, 30% or so of the range. Would rather see them dip back down and catch these lows one more time, 67 3/4 or lower, especially a new low for a trap bottom, and that would give us a reason to buy in. But at the moment, there's not really much we can do here on the S&P until we get it moving in our direction, or at least in an area of larger interest for the buy side. So that's going to do it for the outlook. Now, taking a look at tomorrow's news, we do have a lot going on, and some pretty big ones. I mean, tomorrow we have the non-farm payrolls kind of a big deal, right? At 8:30, we have the non-farm payrolls coming out. Also at 8:30, the unemployment rate for July. Both of them are for July. The non-farm forecasted at 183,000. Previous is 222,000. The unemployment rate forecasted to be slightly lower at 4.3% versus the previous of 4.4%. Out of Canada, we also have the employment change for July, forecasted at 10,000. And at 10 o'clock out of Canada, we have the IV PMI for July, forecasted at 59.2. That's about it, though. So no big news early in the morning, no big news in the evening, nothing else going on. So 8:30, that's really it. And that may lead us into a type of situation where it's going to be early in, get the volatility, and then get the heck out, because it might just die on us pretty quick, especially given this last week of movement. So be careful going into tomorrow, especially with non-farms around the corner. And as always, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.